TGIF. That's what matters.
That's the mood, yeah.
It is a truncated week, but this week looks so long and prolonged largely because of the market action and the news flow, which in a sense has just surrounded us.
It's really been draining.
Yeah.
Starting off from Monday. Yeah.
And there was a holiday. So it's technically been
Didn't really
truncated.
help.
Didn't really help. So TGIF, guys, TGIF, thank God it's Friday. Now look, US economy. And you know, it amazes me that at the beginning of the year, what was the narrative? The narrative for the US economy was that it would be a soft landing, it could be a mild recession, but a slowdown is coming. But the recovery in the US economy, and if you look at the GDP data and the contours of the data as well, it's way above what everybody was anticipating. Even best of the bulls, I think they couldn't imagine a print of anywhere close to 3.5%. We got a print of 4.9%. US consumer is making a comeback. US economy is resilient. How does that matter? Well, that means that will rates go higher? If rates will go higher, what will happen to rate sensitives? What will happen to interest rate sensor? What will happen to some of the technology and high beta names? What will happen to market valuations? So I think now that real narrative of such a strong GDP print, what happens to Fed? How will Fed take a cue in the next meeting, which is due in November? And will there be a change of narrative? So that would be the chatter at least this Friday morning if you're analyzing the global cues, that how everybody in a sense who had predicted a different path for US economy in January 2023 is simply stumped. In cricket terminology, is simply stumped and bowled with what the trajectory of the economy is. So what happens to the dollar index? Well, a measured move. But for rate sensitive, and especially for some of the companies which essentially are richly priced stocks, there a fear of interest rate hike could have an impact in the near term positioning.
Yeah, the only chink in the armor, so to speak, is that better GDP for the US also means rates go up. For now, though, markets are seeing a bit of a rebound after getting into almost an oversold zone. Even if US futures right now, they are trailing in the green, as is the case with Asia as well. In fact, the pre-markets rate are comfortably in the green for US equities. What about our markets? A mammoth FII sell figure, 7,700 crore rupees, no less. We broke the back for the Nifty yesterday, slipped below 19K, breached that 18,900 mark as well. But interesting to note that 7,700 crore rupees was the FII buy figure. The DI sell figure, the DI buy figure was as big.
So, Aisha, if you just look at the FII sell figure in isolation, it just marks off some compulsive selling.
Yeah.
You don't get such a large sell figure till the time you don't have a compulsive selling. And if you map the FII figure in the cash market with the FNO market, there's no arbitrage at play here. So it was a compulsive selling, which was very neatly absorbed by the market. Because frankly, with 7,000 crore of sell figure, if DIs were not standing on the other side of the table, the market would have actually broken down. Now, you got to analyze and say that is this just one-off, or this is beginning of some kind of a risk-off rally in emerging markets, and could this cause a selling stampede? Very difficult to say that. So you have to take each day as it comes. But what I like about the market yesterday, that some of the rank mid-cap stocks, they've started making a comeback. Now let's look at it. I mean, we've got delivery data to establish that where some of the stocks have fallen, and I think selling was very universal. This kind of a sell figure means that some of the heavyweights essentially broken down. Now that's the number which matters to me. Look at JSW Jindal Saw, 17% up from yesterday's low. Garden Reach, 15%. Apar, 13%. Bombay Stock Exchange, 13%. MCX, 13%. Some of the banks also made a strong comeback. So within the small and the mid-cap space, we saw marked recovery, and the market now, stocks which have a story or which have a fundamental substance in the small cap space, they are making a comeback. Domestic institutional investors are sitting on high levels of cash, so a little bit of selling by foreign institutional investors would be absorbed. And third, I guess banks and private banks now really hold the key, given how the market narrative is clearly favoring some of the private banks. So there are three parts to the market. One, large FI selling which was absorbed. B, some of the mid and the small cap stocks from the day's low, they found some takers. And C, the narrative, I think, again, I'm sounding like a broken record here, but you'll have to go back to banks, because for me, that in a sense will be the real canary in a coal mine to tell us which way things are moving.
Right. And just to pick up on the point that you were earlier making about FIIs, the fact that their long positioning is pretty much nearing an all-time low. All-time low was about 9%. For this series, 11%.
Yeah, so it's interesting that typically markets always bottom out when the FI positioning is low,
Yeah.
long positions, or the selling cash figure is high. We are nowhere close to the peak FI investments in the Indian market. The storytelling, the narrative for Indian market, nothing new, is domestic investor and retail investor. So if history is anything to go by, markets tend to bottom out more than often when this kind of a selling pattern is at play. So let's hope that history is at play right now, because with this kind of a narrative in terms of where the Indian economy is moving, where the valuations are, I think if not today, tomorrow, I think the fundamental bottom in large cap stocks, I think, is nearing. I would again say the same thing what I've been maintaining, that this is a bull market correction, folks. In a bull market, the correction is going to be very sharp. It's going to be very savage. There are excesses in the market, and some of the excesses are getting flushed out. I think now you have to, so from no action, now you got to just raise your ante and say that, okay, these are the stocks I always wanted to buy in the mid and the small cap space, and where I'm getting the bargains. My sense is there are two pockets. One is large cap banks and second is pharma. These are the two pockets. One is value, second is growth. So pharma is value and a little bit of growth. Banks is growth and visibility. These are two pockets where I think in the near term we will do well. See, if US economy is doing so well, we'll have to look at sectors which will benefit from that. I don't think IT is benefiting, but pharma will benefit. Exporters will benefit. US economy is coming back because US consumer is coming back. What will the consumer consume? They are not consuming from China. So the goods have been exported from somewhere else, and India is going to benefit out of that. How simple is that?
And private banks are looking cheap right now. I mean, just looking at the valuation parameters as opposed to the 5-year averages.
Yes, sir.
Yeah.
That's what everybody is telling me when I say, private banks are looking cheap. See, there are times in the market where compulsions are at play. And with this kind of a sell figure, I think there is some compulsion which is at play when, these adjustments are happening. So banks do not deserve to underperform, but they're underperforming because everybody was overweight banks, and there is a raft of selling which is happening by foreign institutional investors which own banks. So 3 months from now, 6 months from now, a year from now, I'm reasonably confident that large cap private banks have got all the ingredients in the melting pot which can make them an outperformer, because credit is strong, risk of NPA is not there. They are growing without raising capital, and then valuations are attractive. Typically, when you see this kind of a combination, then the follow-up of this kind of a combination always is that you will see a bout of outperformance. Let the compulsive selling get over. But stay with private banks. I mean, that's what I would think.
Growth visibility is very much evident when it comes to the banking space, that along with pharma, says Nikunj.